guys, it's September the 27th. We've got 3 more days left in this crazy month, and the market is really kind of weird today. Stay tuned because I'm actually going to do something that I haven't done before, which is AMC. I'm definitely, I'm just going to try to explain why I might have nibbled a little bit in market weakness for folks that are like, May, AMC, what's wrong with you? I'll just show you what I'm seeing. I may be a little bit early on this. Okay, don't laugh for those of you. I have a lot of friends that work in high yield debt. So I know if they're seeing this, they're gonna be like, May, what are you doing? But let's go through that in just a bit. First, let's kind of set the stage of what's happening. Okay, we are going to have month end in 2 days. So if you're a little bit aggressively short, this is not the day to be pounding it down. You have 2 more days before both month end and also options expiration on the week. So you will have a lot of gamesmanship because there really isn't any meaningful news flow right now. There's a couple of economic data points that could take you either way in the next really 3 days before we end the quarter. The indices started green. Now they're red. Who knows how they'll end? Oil is ticking back up towards the 80, but dollar mark. This is so oversold in oil. We've already talked about it. And I'd mentioned that during the next 2 months, you would have gamesmanship, but towards the end of October, especially if those companies start reporting earnings, you will not be able to game it anymore because all the companies will come out. And also you'll have this desperate attempt to try to fuel what we know is a massive shortage in Europe. Hence, I continue to suggest that you take opportunities within oil. We talked about it yesterday. It's sexy to offer a 10% dividend yield. I think if you could train your children to feel that these things are sexy, they'll be financially stable for the rest of their life. 10% dividend yield, very attractive is what I'm saying. And you've got that with Devon. The other way to play it that we've been very loud about on Markets with May is IEP, Carl Icahn's company. He does have a massive refiner that he bought very cheaply. And although refining is very different from the oil and gas business, the fact is because of the current events, if you will, there is a massive shortage in oil refining capacity. And he's got, as a result, a wonderfully cash flowing business that will serve investors incredibly well. So we should be really, really good on that one as well. It's offering a 15% dividend yield. Between the two, I think you should own some of each of them. They go great in your IRA. It just kind of depends on how you feel about having a more diversified, and having Carl sit in between you and your investments, because technically, but I actually am super okay with it because I think he's really brilliant. And I should just do one properly on just that video, but there are plenty of videos on my Markets with May where I do go through how the quarter went, et cetera, for IEP. Anyways, that is what this is all about. You probably do still continue to have extreme volatility through the next few weeks as we move from September into October. And a couple last things that I would mention. We do have on Thursday. So tomorrow's pending home sales. That really shouldn't be doing anything. All this home stuff. I mean, it doesn't even matter what they say, good, bad, or otherwise, because we all know that there's no home builder right now that's trying to build new homes. They're just trying to all work through inventory and keep their head down, make sure that balance sheet is tight going into 2023 and whatever it is that the various geopolitical situation brings. So really almost ignore it in a lot of ways, in my opinion, the volatility there. And it is slightly too early until we get a better look at 2023 and what this Fed is going to do as relates to interest rates, and then what we're going to see globally as relates to raw material costs. It's really kind of not the right timing to do too much on the housing side. Although, quite frankly, all of them are shored up as really, really strong balance sheets. I was really impressed with what I saw in all 3 companies in my area. And then when we look at Thursday, we have GDP and finally PCE. PCE, it's going to more or less read the same as CPI. And because the Fed already came out and spoke last week, we know what they saw approximately, or we're seeing on the early indications on their side as well. So the market, though, can react to either of these, however it feels like, because the market can do what it does. We're just followers, quite frankly, in some ways. Final thing, you do have some earnings reports. We've talked about this. I'm not doing any big plays on these but I am listening for macroeconomic news, because definitely sent us some paychecks will give you a sense for what's happening in employment and in the business front. And then I always like to hear what CarMax has to say, because it's a little bit of a different look at the autos business. And that's always really interesting. Okay. What actually made me bother to look at AMC? It was really the APE versus AMC performance. Here's the thing. There are definitely reasons why AMC over APE. And when I read most of the articles, they were saying, hey, you should do AMC because APE is really an instrument by which dilution can happen without touching the share price. Even though, quite frankly, that doesn't make sense to me, because there are lots of companies with multiple share classes, and the concept of fully diluted should incorporate any dilution that could happen, including conversion. That's a lot of mumbo jumbo. I guess I'm going to have to do a video on that jargon language. So like some of the articles just flat out didn't make sense to me at all. And maybe I just don't understand. In the banking stuff, sometimes it can get a little confusing, but I have been around the block for a while, and that just seemed a little bit hokey to me. But what doesn't seem hokey to me is that given that there is a one-for-one conversion clause, if and only if the shareholders of APE specifically vote to allow the conversion to happen, these things should actually trade at parity, and they do not at all. Oh, my little image cut out, but one is, let me see if I can just pull it up on Yahoo Finance. No. Anyways, I think APE is down significantly more. Let's call it, there's a 10% differential between the two approximately. And so I was like, oh, is this just an ARB or what's going on? Like, I'm just curious, how are people playing this? And then I went ahead and did kind of a full review of the financial statements, because here's the thing that's always made me admire this company. The CEO is awesome. Like, he's really, really talented as a turnaround specialist. What he did with Vail is nothing short of brilliant. And I've always admired him and his acumen in being able to see value where other people cannot. And in that regard, regardless with AMC, regardless of what you think, regardless of whether or not you think it's going to 0 or it's going to 100, you got to give this man credit. He has really got a superior ability to understand the banking system and how to finance things appropriately. No matter what happens to AMC, there's 100% reason why Harvard should be doing case studies on this. Case studies are always something that you study if you go to business school. But what he's doing is nothing short of impressive. And so I always am interested to hear how he's financing and working through this and what he's doing as a CEO. But it's really kind of impressive. Up to date, the reason that probably the bears are so bearish is just because they do have a tremendous amount of debt. I'll get to the balance sheet in just a second. But when we look at what's actually happened in the last quarter, we do actually see significant recovery in the stock. Okay. And we all know, like, during the height of meme, when the stock went very aggressively to the sky, so to speak, he did go ahead and issue a bunch of equity to try to pay down debt. And so that was a really brilliant move on his part. And there have been subsequent issues of that nature. But let's just kind of look at it here for a second. Is AMC recovering from the lows? Yes, 100%. Even 2021 looked, in the final quarters, looked better than 2020, but we are seeing revenues up. I don't know why I wrote that number, because that's obviously wrong. 262%, right? Like, so this is more than a double. This is almost a triple, right? And then you are and then EBITDA is actually positive for the folks that are playing along. And that's because D&A, depreciation amortization, is quite a huge number for them. They do have actual physical holdings that do need to be amortized and depreciated. And when you add that back in, we have a positive EBITDA, which is just earnings before interest, tax, depreciation, amortization. Now, there is one other bizarro items that you kind of have to look for, and it is this one right here: investment expense, investment income. That one is a little bit troublesome in some ways. And that has to do with this company that they purchased a 22% stake in, plus they have the right to double that via warrants that were pretty much no cost. And that's this company, Highcroft Mining. Now, in fairness to the bears, WTF, right? Like, honestly, because this is, and I want to show it to you, this is actually a use of capital that may not be ideal. I mean, he did raise like $1.5 billion, fair point. But at the same time, if you're a shareholder, or if you're somebody else, just looking at this is a big WTF. Essentially, the Hycroft mining is found gold and silver in the ground or potential evidence of it, but it's not, it's such a tiny little silver and gold miner, and it's in Arizona versus a place which might, I mean, Arizona is not unfriendly to it, but the United States relative to call it other countries is not a big mining country. Well, I mean, that's not fair either, but we have some extra costs, let's call it, versus like if we're going to go to Latin America or Indonesia to mine silver and gold. But nonetheless, it is a little bit of a awkward thing. On the call, he discussed the idea that he felt that they were just underfinanced. And so really using the acumen of AMC to just finance it was the right call. And I got mixed feelings about that. On the one hand, I've always said to people, what multiple do you put on a stock where the CEO is tremendous with obtaining capital, like infinite? And when you have infinite access to capital, it's really hard to know how to think about what your return, what multiple we should put on you. And I've said that about Tesla before. Here, he's very quickly becoming known to be very able to access the capital markets one way or the other. And it's just really freaking impressive. It's really difficult to then just call him out on doing something that is really off message and off focus. But nonetheless, I am going to just say that bothers me. I'm not going to lie, but for all of the other positive progress that is going on, and that really has to do with really just turning this company around. You can see very clearly that it's not just one geography that's going back to the movies. Although the U.S. markets are by far the strongest and by far the largest, by the way, you are seeing similar activity in the international markets. And also, it's not just one segment, but every portion of their business starting to move in the right direction. And it is a phenomenal thing. And then, there's no cheating. He's getting it off of volume and actual bodies in the seats. And that's a wonderful thing. Here's the EBITDA, just to show you this is the number that's coming out from Hycroft, why the bears have a real potential to be very upset for a reason, because if you look at it, it took 57 million out of EBITDA. That's not great. So at some point that's going to have to be articulated a little better than what was done on the call. Yeah, because it almost sounded like he didn't even try to pretend like this wasn't a private equity-esque purchase. It is 100%. But if his cost of capital is such that all this ends up making sense, maybe, but his argument is only 2% of that whole entire landmass has been mined, and there surely is going to be some sort of finding that allows this to be very capital beneficial. But the mining business is a very capital intensive business, so it's all really strange. Other than that, though, you have to admire the debt pay down. You just have to admire it. One of the things that the bears will look at, and rightfully so, is the fact that total assets is totally overshadowed by total liabilities. And that's despite some pay down. These numbers are going to look a lot different next year. And in a lot of ways, you got some timing because, but the interest expense has actually declined significantly because he did take this 950 million and pay off a bunch of these other higher interest rates. He's at 7.5%, and these are starting at 10.5 and change. Here's what it looked like at the end of the year. So, these were 11.25, 10.5, 10 to 12, depending on the PIK toggle way that it comes out. He converted a bunch of shares into equity, therefore diluting shareholders. But nonetheless, it's not like the rate of the pay down and what's happening on the pay down is really, really admirable. Does that mean that it is investable is the real question. I don't know. To be honest with you, I don't know. It is I actually do think you should take the ape. So I would kind of disagree. And maybe that's because I still have a lot of additional work to do to understand it. But this is what the SEC filing said. Additionally, there were some things he said on the call. There is an anti-dilution clause in that SEC filing. So I was it's a little bit of a curiosity. And the anti-dilution clause appears to allow, but nonetheless, most of the dilution will come from the APE shares. So the APE shareholders have an ability to get diluted a particular way. So I'm not sure what exactly it is that people are upset about here. In particular, it may be that he has currently no additional desire to dilute, but that said, he sure has a lot of debt. So we'll have to see if cash flow can actually run down the cash flow statement after this quarter. There are special voting rights associated with the APE. Essentially, the shareholders get to vote if they need to be further diluted in order to support this transition on financing, because I think most of what would be concerned or considered would be the financing side of it. There is an automatic conversion in the case of a corporate action. So immediately these shares trade 1-for-1 with these immediately. If anything gets sold, I don't think he has intentions to sell. He sounds like he's very, very aggressive here in what he's trying to do. Again, what I mentioned with the dilution and funding would probably come out of this arm right this minute, because the shareholders have voted against further dilution here. And then at any point, the shareholders can just convert this 1-for-1 with a vote of the majority. I believe that's what it is. I should double check that. But there is an ability to convert APE shares into AMC shares further down the line. But that is really what I have. And I don't know what the right discount is between these, but this seems awfully steep, is what made it interesting to me, because I do think it appears that you're recreating AMC much lower. I've wanted to play along with the meme guys, so I don't actually, if I can get this at a discount via APE, I'm intrigued, so to speak. And that's what I kind of wanted to present. I'm going to stop share and take questions, but I will admit there are people that know this a lot better than I do. But at the same time, it's showing up as something I wanted to do a little work on.
Amy, I'm so happy you brought that up, because I don't know, a month ago they were talking where APE is exactly the same as AMC as far as financials. So either one is way overpriced or one is way underpriced.
It's got to be one or the other. Now, because you can't convert freely, like it has to be a conversion through vote, it would make sense that you would have some difference in the trading of the two. That said, and I think that it was, he has written it a particular way. And unfortunately, the language in the SEC filing is really special. I like to say I'm not a dumb girl as far as it goes. Maybe I'm a little bit better than the average person that might be reading that release, but I struggled with it, because what it really looks like to me is there are these APE preferred units, these AMC preferred units that you actually got. And then they convert to AMC preferred shares at a ratio of 1-to-100. And the AMC preferred shares then convert to AMC shares 100-to-1. So essentially, that's how you get from this APE to AMC. And then there's a bunch of different things that they're saying in there to specify a number of different ways, basically to get around diluting AMC. And then there's a lot of other things that they're trying to do as a means of addressing the shadow shares issue, I guess, is an issue in the stock about folks that are shorting this naked in some way. All in all, sum told, it's a little bit unclear on exactly what they're saying is the mechanics that's going on here, because I do think that the part of the reason why this particular SEC filing has such precise writing is because you do have a lot of folks that are playing AMC in a mechanical way. In other words, they have no thought process on this stock whatsoever. They don't care if it goes up or down, but they're interested in the mechanical reasons why it goes up and down, namely a combination of what's going on in the options market, a combination of what it means to actually be short with options versus shorting with stock, et cetera, et cetera. And I think the language is trying to address that kind of mechanical activity. But as a result, it's hella difficult to understand what he's trying to say in there. If I could just get I mean, what I really need to do at some point in the infinite to-do list of my life is just call investor relations and have them really talk me through what precisely did he mean by different parts of it, and what does he see in the future are voting rights? Because the fact that he split the share classes does imply that management could do different voting aspects to one share class versus another. Unfortunately, most of the release, because of the timing of when it came out, August 4th, and then the shareholders of record before August 23rd or 22nd, before 22nd issued, I think a settlement date 23rd in the AM. Whatever, I'm probably using the wrong language there. Apologies to my jargon kings and queens out there. But because of that, instead of having a lot more lively and interesting discussion about what the go forward would be as relates to rights of shareholders of the APE versus non-APE versus AMC shares, it was really to address the very pressing and very important questions that you would have on the immediate activity to happen in the next month coming. Fair point. It's a 1 hour call. It can't be forever. But I would be intrigued to see if he's got additional subsequent thoughts going forward on what shareholders of APE have. So a lot of people bought it because they wanted the APE NFT. I don't know, that's a thing. We're too old for that. I want to make money. That's what I want to make. But I actually think I'm intrigued. I need to understand this better, but I am willing to play along.
Why did he do the ape? Was it just to raise money?
It was to allow himself the breath, because what the shorts were saying is that he's hit his cap on how much additional equity he could issue with AMC.
Oh, okay.
And so he created
another instrument. Okay, cool.
He just created another instrument and then structured it so that there's a huge buffer such that you couldn't accuse him of diluting, and there's enough difference between APE and AMC that the SEC could approve it. Thereby, in doing so, he could raise through the APE vehicle and have all the capital he needs to continue to do what he wants to do in the case that the stock rallies or if APE shares rally. So it's an interesting, I mean, it really impressive. So impressive.
Very creative.
Yeah. And given that the given that the business is in its ups, I mean, like these are really good, these are decent numbers, right? This is a really good income statement. He's got a lot of financing charges. EBITDA is positive. It still needs to get more positive, and there's a lot more that he needs to do, but the business is headed in the right direction. It's just that there's a ridiculous amount of debt. And then even after the debt gets paid, we as the equity shareholders have to consider what the implications are. What do we really get to take home? It does, like, and then this mining acquisition, which I think, I mean, I don't think it's the worst purchase a company could make. It's just whether or not they should have made it. Do you know what I mean? Is the thing. Like it's kind of like if you can't pay rent, be investing in stocks first.
Silver? What kind of mining is it?
It's gold and silver out of Nevada, but in fairness, once you own that land, essentially when you're buying these miners, you're buying whatever operations they have, whatever research they've already done, the team in place, and then the go forward and any raw materials that are in that land, and any metals in mining that are in that land. But specifically, they believe there's gold in them hills, so to speak.
Beverly Hillbillies. Huh? No,
yeah, look, you know how I like my TV shows. That's really good. I got to tell you, he reminds me, there's an old Michael Douglas, I think it's Michael Douglas, early days. I used to play on network TV all the time about like a Michigan, and there was like a Toyota, like a Japanese company came in and redid it. And he comes in, and at the final scene, he's like, I'll buy this car, but the wheels are like falling off of it. Their numbers. I kind of feel like this guy is a little bit like that Michael Douglas character. I think, no, it's not Michael Douglas. It's Michael Keaton. I'm sorry. Do you know what show I'm talking about? I'll have to look it up.
Michael Keaton.
Like it's a Japanese auto manufacturer, and he comes in and buys this Flint, Michigan company. It doesn't matter. Anyways, I just got to give him a lot of credit. I mean, how do you not like a guy that's doing all these really impressive things to try to pay down that debt and restructure? Whether he gets it done or not. I think it's brilliant. My admiration.
There's also technically, and Richard will. There's a gap at 13.15 on AMC.
Yeah.
that will
I
be.
think I've got the ape shares, and I bought some because the options were cheap. I think I have some like $5 AMC options. Just I want to see, they weren't expensive. But I was like, it was a decent quarter. If I comp AMC to other companies that are of this kind of, weird balance sheet, like a small cap land isn't my deal. So I may live to regret this in a big way. I'll probably keep the ape shares as far as that goes, but whether or not I'll puke out the calls that I bought, they are in the money. They are making money for me, but
Well, get on Reddit and join those apes.
Shoot, I've never shorted AMC. So if you're watching this and you're one of those hardcore meme people, don't hate because they just said I might let go of the calls.
Okay, thank you.
All right. Anything else? All right, cool. Good luck out there.
I think that, overall market, it's completed an Elliott wave, last leg down. So Goldman Sachs and Blackstone getting bearish late in the game is not, I don't think it's wise.
You think they're calling the bottom there for us?
Exactly. Thank you.
All right. Well, somebody has to call the bottom. All right, cool. Good luck, guys. Remember, 3 days month end, the trading activity should be particularly weird. So take care. Bye.